Where India's central bank, the Reserve Bank of India, has kept the key policy rate unchanged at 6.5%. RBI's Governor Shaktikanta Das made the announcement in the bi-monthly policy review of the RBI, maintaining the rates unchanged for the 8th consecutive time for the upcoming financial year 2024-25. This is the first monetary policy review after the Lok Sabha election results that brought the NDA back in office for the third term. Remember, Prime Minister Modi is set to take oath this Sunday on the 9th of June. RBI Governor Shaktikanta Das headed the 6-member Monetary Policy Committee, in which a majority of the members voted to keep the benchmark repo rate at 6.5% and continued with its stance of withdrawal of accommodation. RBI's Monetary Policy Committee began its 3-day meeting on the 5th of June, and the decision has been announced on the 7th of June. Status quo on interest rates is in line with the expectations of economists as inflation in India continues to be stubborn. Governor Shaktikanta Das also mentioned that food inflation is something that the central bank would be keeping an eye on.
Monetary Policy Committee met on 5th, 6th and 7th June. After detailed assessment of the evolving macroeconomic and financial developments and the outlook, the MPC decided by a 4:2 majority to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF, rate remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate at 6.75%.
And now we have my colleague Karthik Malhotra joining us for more on that. Karthik, 8th consecutive time the interest rates in India have been kept unchanged. It's an important move. Also, help us understand, what does the term withdrawal of accommodation in the RBI stance mean?
Hi, Krishna. Yeah, great. So I think, nothing really unexpected. The RBI was expected to keep the key policy rate, the key repo rate, unchanged at 6.5%. And you're right, this is the 8th consecutive time that has happened. In fact, the last rate hike cycle that we saw ended early last year. And since then, the RBI has maintained status quo. Withdrawal of accommodation is also the stance that the RBI has been maintaining for the last 1 year, which means the RBI is not really hinting at a rate cut anytime soon. And that also seems fairly, plausible at this moment, simply because inflation continues to be stubborn. Inflation for the year gone by has come well above RBI's threshold of 4%, and even for the financial year 25, the RBI is saying that inflation, the headline inflation CPI, is likely to be at 4.5%. Governor Shaktikanta Das incidentally also mentioned that food inflation is something that the RBI would be monitoring very, very closely. And food inflation is something which, obviously, as we know, is directly dependent upon monsoon and dependent upon other constraints which are outside of the ambit of the Reserve Bank. And like any other country, I think, India is not insulated from inflation right now. Remember, this also comes when the European Central Bank has decided to also keep policy rates unchanged. So overall, I think, inflation continues to be a pain point well above RBI's threshold of 4%. And there doesn't seem to be any case with the withdrawal of accommodation stance in place and with headline inflation continuing to remain at 4.5% for this financial year. There isn't really a likelihood of a rate cut anytime soon, Krishna.